All right, good morning, everyone. Louis Porcelino, and today is July 27th, and this is the ES Morning Call, along with all the other things that we talk about. But China getting whacked this morning for 7% down, uh, and causing a little bit of a spook around the world, and also in all the other markets, the commodity markets are still performing on the downside. So let's take a look at this day chart that we've been talking about. Look, I've been showing you this chart all year. I mean, we're basically still stuck in the range. So here we are. We went back up. We got to the top part of this 2112, failed to make any new highs up in here. We failed again. We're on our third day down. Are we going back to 2032? Ultimately, you know me, I want to see it go down to 1090. That would be great down there. And then let's see if we can make a rebound from there, right? So I'm looking for the market to go actually 1970. I'm sorry, 1090. What am I crazy? 1970, all right? So that's what I'm looking for, right? Our next stop here is, between 2032 now. Will we stop there? We're about 3,000 points from there. So, the earnings was out last week. All the negative effect on the commodities is very deflationary. Gold is getting killed again. So we should take a look at that and keep that in the back of our mind as we're trading. And I think that we're in a downtrend right now, and we have to sell it against the 2083 area, the 2085, right? So this is the key area. Do we get back above there? All right. When I look at we were talking about, we just keep talking about these things. And so now we finally filled this gap that we were worried about back here to 75, right? And then the next stop is this 2035. Do we go back here or do we consolidate here now that we filled the gap and go back up? I mean, these are the the things as chartists and technical analysis that we have to look at and deal with. But at least it gives us a perspective on how to deal with the markets. Okay, so let's take a look at the overnight. Pretty big range overnight. We got high of 2080.75. We've got a low of 2064 even, or I'm sorry, quarter, and it looks like they're trying to make their move back on the downside. This is telling me they still looks like they want to put some volume in here. And then yesterday was our trend day down. All right, I think we identified this trend day by 10 o'clock on Friday. Okay, so do we keep moving back and go back in these areas where we didn't spend a lot of time? We made these bottoms. You take a look at this right here. Here's 2050, but take a look over here when we get down here in the 2035 area. All right, look at these three lows. This is the three lows that I'm talking about right here. Okay, we got this low here at 2034. We got this low right here at 2035. We got this low right here at 2036, and then we had this low here at 2038 quarter, and then we just went back up to that area. So this was all based on Greek news. Now I think it's more based on the fact that we have a lot of earnings that were kind of not really dismal, but typical of this quarter, and that is slowed down and so on, which is affecting everything else that we do in our life. Here, look at gold here. Everybody's talking about gold going under 1,000. Okay, I don't see it, but you know what? Here's the problem now. These used to be specialty markets, markets that were traded just by individuals and specialists. The funds are in here now, and I think we talked about this back in '04, '05. The big funds decided they were going to trade the commodity markets, and they put about $350 billion into commodity funds, and that money's actually raised since then. So we're looking at gold back inside value. We got a bull bear zone at 1099.70, 1099.70. You're right in the middle of value here. You know the key. You know the drill. Here's 1081.74, 1080 down here. So keep an eye on gold. It did spike back up to 1095. So remember the old low before that for the year was around 1130, 1130. So I guess we're gonna have to stay short. Here we go. 30 year. back to 1.75, 155 and a quarter, 155 and a quarter. You know, this came off of the highs of 165 back down to 148. All this dismal news is really going to put a stress on Janet and the rest of the girls to raise rates in September. So we'll have to keep an eye on this. 154.29 for us is our bull bear zone. It's also the top of value, and these are all like right inside each other. The bottom of value and point of control. So we're trading up to 155 and a quarter, and then from the Sheik of Alabique, as we talked last week, we got one of our analysts here today telling me it's going to 46 today for sure. We'll see if he's any good, right, Luke? All right, where did that go? There it is. Thank you. All right. Here we got an oil trading way below value. Okay. 47.97 is our point of control. Our bull bear zone is 48.03. The shaded area, there's blue and there's orange or gold sort of thing. 48.15 point of control. 48.47. Remember, Goldman Sachs had said that this was going to be a $45 oil by October. We're there almost now. And also the fact that that's what happened. I made it too small. So, keep an eye on this. I still think that there's a very, very stupid low coming yet, like down in the 30s, maybe low 30s in oil, and then that'll be the end. All right, everybody, let's talk about SPOOs for the day. Our top of value is 2089.75. Our 2078 half will be the bull bear zone. 2073 half is the point of control. 2072 half is the bottom of value. Now we're coming off a trend day, but also there's a lot of negative news in the market. The commodity markets is not good for, and the strong dollar is actually saying that we're going to have deflation. I think we're going to get a two-sided trade here. I gotta be telling you, I'm looking to trade from the short side. All right, everybody, have a good day trading. All right, we'll talk to you later, and stay with us on Twitter so you can get in front of the curve as it comes. Talk to you later. Bye.